What's up, guys? It's Tom with Stocked Up. I'd love to wish everybody a happy new year. I cannot wait for what 2020 has to bring for us, you guys. A lot of opportunities in the market this year. You can see the markets have been rising all of last year. This year is going to be even better. It doesn't even matter if the markets go up or down, guys. All that matters is how we play the market. We can buy puts, we can buy calls, we can buy shares, we can short shares, we can do anything, guys. We can buy spreads, we could do a debit spread, a call spread, a diagonal butterfly, an iron condor. There's all types of different trades, you guys. And 2020 will definitely be the year to learn and the year to grow. To grow with us, smash that sub. Click that link below, sign up for Stock Mastery, get in the Discord, ask any questions you have, and learn and grow with us, guys. That is how you will be better in the markets during 2020. Instead of sitting around this 2020, get up, get some energy. These markets this year, you guys, are going to have a lot of volatility in them. The VIX, VXX, all those stocks like that are starting to gain a lot of volatility, a lot of volume. You guys will see this year will definitely be a more volatile year than last year. Last year, all the stocks pretty much went up from the beginning of the year onwards. They pretty much just went up. Now this year, you guys, expect to see a little bit more fluctuations, a little more volume in the markets. And the reason for all the volatility is because of the elections. Elections have a huge impact on the market. As you can see right here was the 2016 election. You can see that the market just went ahead and skyrocketed afterwards. It all depends on what happens with the elections, obviously, but you could see a market downturn here. This was the latest downturn, which was right here. This was the right before the beginning of last year, and then at the beginning of last year, the market skyrocketed again. But be very wary of these very small pullbacks like this, or corrections, we would like to say. If it breaks this 1,000 SMA, expect a big pullback. Look at the last time it was below the 1,000. Look at that pullback. In 2008, it fell below the 1,000 SMA, and it was just doomed. Look at it. It falls below the SMA, comes up, touches it, and just flies downwards. We do not want that to happen. It almost happened here. I don't know how they kept the markets alive, but it could happen. And if it falls below that 1,000, really expect the market to drop. But if it's just running right down to the 1,000, that might be a good buying opportunity. As you can see here, buying opportunity, buying opportunity. And these are buying opportunities because they have low risk. It's not just because it touched the 1,000. Look, you're up 30% to risk. If it falls below the 1,000, you're risking 1%. I mean, it's a no-brainer. The market always goes up. It'll always go down. One thing that you can do whenever the market's going down is that you can start buying puts and buying credit spreads. Now, what you can do is you can sign up for stat modeling, and Mike will post all these puts and all these credit spreads all the time. You see whenever the market pulled back right here, 17%, Mike was making like 1,000% on some put options on certain stocks because those stocks were falling like 10% on a daily. And that's huge. That's huge for options. You can make huge percentages that way, but they are a little riskier, but you will make very good percentages, and you can really limit your risk if you guys put in the time to learn how to do the different types of spreads. You can really learn how to limit risk. It will limit your gain, but it will limit your risk in a much better way. For example, you'll risk about $25 to make about $200, or and that's with a naked option, but with some of the spreads, you'll risk $200 to make $20, but the difference is that you'll win 90 to 95% of the time. Whenever you're just trading naked calls and puts, you could be up or down 200% in a day. Obviously, you can't be down 200%, but you'll lose all of your investment. You could possibly lose it all in one day if the market goes against you, or if you don't have a stop loss. But if you're doing the spreads, you could, for example, if you lose $200, that's going to be like a 1 out of like 200 or 100 trades. And a lot of people can't understand this because it goes against your normal thinking. You're risking more to make less. But the thing is that your win percentage is so high that you very, very rarely lose. So your money is somewhat safer in something like that than it would be trading a naked call or a naked put, because with a naked call or naked put, for example, you could lose 50% if the stock moves up or down 50 cents the next day. If you guys are into stocks, we have a program called Stock Mastery. The link will be below. Definitely check it out. You'll get access to 1 stock course, 1 options course, and 2 stock picking systems, as well as unlimited support and your own stock algorithm on TradingView. You guys will not be disappointed. It's definitely a deal worth over $2,500. It's only $500 right now. The price will go up, so don't miss out. And Mike does all the stat modeling plays in Discord. Those are all of our options plays. They're very good, reliable plays, you guys. They have a 90 to 95% win rate. Check it out. The links will be below. This is Tom. I'll see you later. I hope you guys have an awesome 2020 moving forward.